Stocks ramp up, but can this rally be trusted? In today's cover story, signed, sealed, delivered. What strong results at shipping company signal about the economy. Plus, the housing discounts no one ever talks about. And word on the street is a social media stock could be heading to $100. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Monday, October 27th. In today's First Look, a big week ahead for the market. Traders are bracing for a heavy week of earnings coming from social media companies to oil giants. The Fed is expected to end QE3, and GDP is also due out. The stock market is fear falling at this point. The volatility index relaxed more than 2% Friday as stocks closed out about the best week in almost 2 years. The Dow rallied 127 points, the Nasdaq 31, and S&P 14. Gold and oil made modest moves. And from the fashion front, Italy's highest court acquits Dolce & Gabbana, putting the wraps on a high-profile tax evasion case. Time to say good morning to Mark Sebastian of OptionPit.com. Happy Monday, Mark.
Good morning.
Well, the stock market is heading higher. Are investors ahead in the gain game?
Yeah, we've kind of settled at a very important technical level in between 1961 and 1966 on Friday. That's right in between the 100-day and the 50-day moving average. I think today is going to really set the tone for whether the S&P is making another run back to 2000 or whether this is going to be the resistance point and the market starts easing off.
We have the Fed ahead this week. What's in store, do you think, for the Treasury market?
Yeah, well, rates are already pricing in that the Fed is going to change their policy more toward a 2016 raise in rates. I wouldn't be surprised if they maybe even take it a little further than that. Rates have made a really strong move ahead of this meeting. So this Federal Reserve meeting could really be important to the markets.
And with an eye on earnings, what are you watching for in earnings announcements?
Well, we're right in the middle of earnings season. So far, it's been pretty 50-50. I think Facebook is really interesting. It's right near all-time highs into its earnings. That's going to be a really interesting one to watch. It's going to be a fun race seeing whether Facebook or Alibaba ends up having a higher valuation coming out of this quarter.
Both of those stocks have been moving up. We'll see. Thank you, Mark.
Thank you.
Angie, Ebola remains a wild card in the stock market. Friday, stocks connected to the virus had a strong reaction after the first confirmed case in New York City. Lakeland Industries, which makes hazmat suits, rallied 20% before falling 14%. Goggle maker Alpha Protec rallied 3%. Airline stocks also rallied. Travel Zoo's Gabe Zaglier says that the travel industry is monitoring the situation, which could dictate future demand.
If things stay as is, I think the industry feels that it's safe to kick up things like airfare. If that changes, and again, I feel it's going to remain a bit of a fluid situation. If that changes, then we could see demand pull back, and that could open up unusual opportunities for things like airfare to drop.
On Capitol Hill, lawmakers remain divided on the response to the outbreak.
It would be a major mistake to underestimate what Ebola could do to populations around the world. It appears that healthcare authorities have come a long way in preparing for Ebola since Thomas Duncan first walked into a Texas hospital last month.
A nurses union is pushing for Congress to mandate national standards for healthcare workers treating Ebola patients. Nurse Nina Pham, who contracted Ebola from Thomas Duncan, was discharged Friday and is now virus-free.
On the heels of the bank stress test in the Eurozone, this week the European Union will consider a bridge loan for Ukraine. German Chancellor Angela Merkel says it would make it possible for Kiev to pay in advance for upcoming Russian gas deliveries. Russian oil giant Gazprom cut off Kiev's gas supply because of a $4.5 billion debt. Russia has money troubles of its own. The Russian ruble fell to another all-time low against the dollar Friday.
In today's cover story, companies that move the goods we buy say things are going so smoothly that they predict the end-of-year shipments may be record breakers, and that bodes well for the economy. Business is up at United Parcel Service with third-quarter sales of more than $14 billion and a net income of more than $1.2 billion. And for December holidays, UPS expects shipments 11% higher than last year.
From what we see in the UPS's results today, we think the U.S. and Asian economies look strong, Europe a little less so. Now, UPS has indicated pretty good strength in Europe, even throughout the last few years when we think the European economy wasn't nearly as strong as it has been here in the U.S.
The boost in business will also mean more holiday hiring. UPS plans to add 95,000 seasonal workers. That's up from 55,000 last year. Competitor FedEx will hire 50,000 employees for the holidays, an increase from last year's 40,000. FedEx also anticipates a record holiday season with 22.6 million shipments on the targeted peak day of December 15th.
Well, both companies are executing extremely well. It's rare to see either one stumble. It's particularly rare to see UPS stumble. This is one of the highest quality companies we cover. UPS a bit stronger. It's a higher margin business. This quarter, the company turned in 13.7% operating margin. Compare that to FedEx, which was about 7%.
Both companies spent millions improving their capacity to deliver last-minute orders in time for the holidays. But low fuel prices have offset some of that expense. However, the holiday predictions are not as high at Amazon. The e-retailer, whose Fire smartphone that critics said was confusing to use, never caught on. And an app to buy things on Amazon more easily wasn't enough of a reason to switch from competitors. It's reportedly sold fewer than 35,000 of them in the U.S. It has $83 million worth of them sitting in inventory.
Yeah, I think the problem that Amazon is seeing is the same problem that pretty much all phone makers are going to eventually be seeing, and that is that it is a commoditized business. Right? We've not seen any sort of rapid, incredible innovation on the phone front for a long time. All they're doing is getting cheaper.
In a less than smooth move, Amazon has decided to take a write-down of $170 million on the Fire phone.
Ford shares stalled out on earnings. The stock is down for the year and tumbled 4% Friday. The car company beat Wall Street's predictions but took a financial hit on lower sales and higher recall costs. Ford plans to roll out a new Mustang and an F-150 with an aluminum body. Ford CEO says the company has the expertise to build a Tesla-style electric car. Procter & Gamble shares gained more than 2% Friday after meeting earnings estimates, but revenue fell shy. What spurred the stock higher was P&G's plan to split off its Duracell battery business into a separate company.
Sears is reportedly downsizing operations. The retailer is closing 77 stores and cutting 5,300 jobs. That's according to Seeking Alpha. 46 Kmart locations and 31 Sears stores will close ahead of the Christmas holiday. Sears has been struggling with sluggish sales at its flagship and Kmart stores. Sears had no immediate comment. Shares at Sears hit a high of nearly $41 after the announcement and finished the day up more than 8% at $38.97.
SodaStream shares bubbled up on a deal to test Pepsi products. The stock jumped 15% Friday. Beverage Digest reported SodaStream will test Pepsi brands that are naturally sweetened. Pepsi stock gained 80 cents. Pepsi confirms it has a small-scale limited-time test scheduled for later this year with a home soda machine company.
Chiquita shareholders are rejecting a plan to merge with its Irish rival Fifes in favor of a possible better deal. The all-cash deal would have made the combined companies the world's largest banana supplier. The companies would have incorporated in Dublin to take advantage of the lower tax rate there. Chiquita is now entering talks with Brazil-based Safra Group and juice company Cutrale, which are offering $14.50 per share, up from the original $13 per share in August. Chiquita shares were up nearly 3%, closing at $14.16 Friday.
Yet another automaker is pulling out of its stake in Tesla. Reports say Toyota has sold some of its shares in the electric car company. Tesla and Toyota bonded in a partnership back in 2010. At the time, Toyota invested close to $50 million in Tesla. Also last week, Daimler sold its 4% stake in Tesla. Tesla shares closed lower by a nickel Friday.
Lockheed Martin locks down a $4 billion deal with the Pentagon. The defense contractor will supply the government with 43 F-35 jets, seen here. The deal was overdue. In June, one of the Pentagon's F-35 models experienced engine failure. Concern over the jets grounded the fleet for weeks. Lockheed stock traded last at $181.33.
Billionaire investor Carl Icahn is rolling the dice that 3,000 union workers will save Taj Mahal Casino. Icahn tweeted a message to Taj Local 54 employees saying, "Now is not the time to fight. Now is the time to stop and ask, what can I do to help save the Taj?" The union responded, "Mr. Icahn thinks he can get what he wants by using bankruptcy court and hiding behind judges." Recently, a judge ended the union's contract with a bankrupt casino. The canceled contract reportedly will save Trump Entertainment Resorts $14 million per year. The union is fighting to save pensions and health insurance coverage.
Setbacks at one of the nation's busiest shipping ports is creating problems for retailers. The Port of Long Beach is delaying shipments by up to 3 weeks due to a shortage of trucking equipment. The port ships cargo to Walmart, JCPenney, Macy's, and more. The National Retail Federation reports drawn-out contract negotiations for port workers are also causing problems. However, the union is not commenting on the delays. It could have retailers in a scramble to get merchandise on store shelves by the holidays.
Interns working behind the scenes of Saturday Night Live just came into money. A lawsuit filed by former SNL interns claimed NBC Universal illegally classified them as interns exempt from federal and state minimum wage. While the two sides reached a settlement of $6.4 million, the average payout will be $505, although some interns will be paid up to $10,000.
World's billionaires have more in common than just money. Many also hail from a handful of top universities in the U.S. WealthX, which researches high net worth individuals, and UBS finds the University of Pennsylvania topping the list with 25 billionaire alum. Harvard, Yale, the University of Southern California, and Princeton round out the top 5.
Turning to the economic calendar for today, it's pending home sales for September. And on the earnings calendar, a big day. Allergan, T-Mobile, Merck, Crocs, Caesars Entertainment, Universal Health, Denny's, Amgen, Burger King, and Buffalo Wild Wings. Still to come, the kings of social media report earnings this week, how traders plan to get connected, and are full-time workers in jeopardy of losing their company health benefits. Plus, why joining a fraternity in college could save you money now on home insurance. Secret deals revealed after the break. Discounts are available on insurance for your home, but most insurance companies are not so quick to let you know about the secret savings. Crescinda Ponder of Bankrate.com is Skyping with us this morning to tell all. Hello, Crescinda. I will be the first to admit I had no idea these discounts existed, starting with savings on recently renovated or newly built homes.
Yes, it is possible to get a discount on your home insurance if you let your insurer know that your home is brand new or you recently renovated it.
Disaster roofing is next on the list.
Same situation. If whatever you do to mitigate any losses to your house, it could possibly help you save money on your home insurance.
Now, you found that senior citizens could also be in for savings on home insurance. How so?
Yes, and insurers look at senior citizens in a different light because they're home more often, so they could possibly stop a burglary from happening, or if there's a fire or some kind of situation happens where a potential fire could happen, they can stop it before it becomes a problem.
And explain how this one works. Early shoppers.
So if you request a quote before your current policy expires, it is possible to get a discount on your next home insurance policy.
Going claim-free, having loyalty with the insurance company, and being a non-smoker all makes sense, but do you need to ask for the discounts?
Absolutely. Your insurer might not volunteer this information to you, so it's up to you to do your homework and take the initiative if you want the savings. So you have to ask about discounts.
And finally, and this one is not obvious, belonging to a fraternity, sorority, or professional group can save you money on home insurance.
Yes, absolutely. It is possible to get what they call an affinity discount. So if you work for a certain company in a certain field, or you belong to a fraternity or sorority, you may be able to save on your home insurance.
Thank you, Crescinda, for those great tips.
Thanks for having me.
Coming up, the spotlight turns to social media stocks this week. And after the break, Bill Mahler explores if health insurance is going the way of pension plans. corporate earnings pour in, it's becoming clear healthcare costs under Obamacare are not inflicting overwhelming injuries to corporations. According to Bloomberg News, insurance premiums for companies offering health benefits increased less than 3% this year. That is the lowest rate in 16 years. ADP, the largest U.S. payroll firm, reports none of its 600,000 employers plan to eliminate health benefits for full-time workers in response to the Health Care Act. Bill Mahler brings us another view of Obamacare.
Now, you probably heard the news. We reported it here recently. Walmart is eliminating health insurance for 30,000 of its temporary workers. So the question is this the beginning of a trend in corporate America? Are there surprises in store for full-time workers? Michael Mahoney, he is the Senior Vice President for the online health insurance comparison service, GoHealthInsurance.com. Okay, Michael, why is this happening?
Sure, I think it is part of a trend, and you're going to see more of it. And it's really because they now know that consumers have another alternative and they can get insurance on their own in a public marketplace, and the employer isn't required to provide it. The second thing is government subsidies. Last year, the average person, according to HHS, paid only $69 a month for their insurance.
Really?
Because of the subsidies. So right now there's an incentive for corporations to say, hey, look, go use a site like ours or another one to purchase a plan and make use of those government subsidies.
So what about options here? If somebody suddenly finds that they've lost their insurance, is COBRA still a stopgap?
COBRA is still available, but I would seriously caution anybody from selecting COBRA right away. There's two reasons. One, once you elect COBRA, that's it. You no longer have a qualifying life event. So let's say you lose your job. You have time to enroll in a marketplace plan, but once you elect COBRA, you can no longer enroll in that plan until the next open enrollment period, which means if it's in the spring, you have to wait till the fall of the next year to enroll.
And isn't COBRA kind of pricing itself out of the market?
It is, because essentially with COBRA, what you're now absorbing is both sides of the cost, your old cost and the portion that your employer paid. Now, with a plan that's available on the marketplace, not only is that a lower cost in general, you're also making use of government subsidies. And last year, those subsidies paid for about 75% of every person's bill. That's a material impact.
All right, so part-time workers, is there any possibility that full-time employees might find themselves suddenly without insurance?
A lot of companies are exploring it. I mean, I think it's going the way of pensions and corporate country clubs. There's no strong reason why an employer should be the one administering health insurance benefits. It was really just because they had the infrastructure before. But now with both the public and exchange at healthcare.gov and even private entities like ours that have that infrastructure, people can make those decisions outside of those corporations.
Is it just the kind of difficult period of transition? Ultimately, it'll shake down, and you think ACA itself, in fact, will be running smoothly?
The law will. I think it'll take a few years, and part of it that's on the consumer. A lot of people that are choosing plans right now are choosing it for the first time, so we're asking them to make a decision, and they may not know exactly what to buy, what the ramifications of it. So once they use their plans for a few years, I think we'll be a lot smoother.
Michael Mahoney from GoHealthInsurance.com. Thanks so much.
My pleasure.
Still ahead, social media companies are about to post earnings. Find out what the options market is predicting about Twitter, Facebook, and LinkedIn. Chart Talk is next. Traders are feeling social this week. James O'Malley of Option Hacker joins us now, and Twitter reports today. What do the charts have to say?
So Twitter is an interesting one because we've seen a lot of these social media stocks, namely Facebook, coming back in a very strong way here, yet Twitter hasn't quite put together the same type of rally. They haven't been a public company for as long as Facebook, but generally they tend to disappoint on earnings. Investors don't really find the things that they're looking for in the earning reports from Twitter. It's sold off 2 of the past 3 quarters. So unfortunately, I don't think I can justify a long position here in Twitter. I'll be looking to play it flat to short ahead of earnings.
In the options market, call buyers have been stepping up the pace with Facebook. Do you think this stock is likely to rally off of earnings?
I think Facebook is extremely likely to rally off of earnings. I think this stock wants to go to 100. We're seeing really strong charts here. We're seeing a lot of bullish options activity. If we take a look at what they're implying for earnings specifically, we're seeing that their market makers are looking for a move higher, just below $6. That's a pretty sizable move to the upside in Facebook, which would give me a target right around 86 by Friday's close. Now, it's rallied 6 of the past 8 quarters on earnings historically, so I think this is a pretty solid setup from here to get long Facebook ahead of earnings.
Last but not least, LinkedIn also reports in with earnings, James.
Right, so LinkedIn is another interesting one because this one trades at a much higher dollar amount. They tend to price in a little bit too much movement in LinkedIn ahead of earnings. Traders usually expect it to move more than it does. So my strategy when trading LinkedIn around earnings is to look for good credit spreads to sell to try to fade that implied movement. So I do think that the stock is going to move. If I had to pick a direction, I would say higher. However, I don't think it's going to move that much.
Not a big mover there. Thank you, James.
Thank you.
Well, that's it for today. Coming up tomorrow, the Fed says goodbye this week to QE3. Find out what that means for Treasury yields and interest rates. From all of us at First Business, have a marvelous Monday.